Quick update for Monday, February 3rd. Another wild and wacky day of price action. Huge gap down in the S&P. I saw it. I think I saw it down 130 points at one point. SPX, if we look at SPX, climbed all the way back almost to Friday's low before tailing off a little bit into the end of the day. Looking at a daily chart of ES, you can see we swept the lows of last Monday, which was that big Sunday gap, overnight gap. Something similar here. Another really big rebound. A lot of tariff talk. A lot of, negotiating going on. And every time something comes out, we're seeing a big move. So again, you've got to adapt your trading. If you're trying to force a square peg in a round hole and continue to do the same thing you did last year, you're probably not having a very good year. You've got to adapt your trading. Today was actually a pretty good day. I had two losing trades. One was Wooga at the end of the day. As that move just continued to tail off to the downside. I was hoping for consolidation right here around the expected move area, which is around 60.13, which we saw for a good part, and then it just kind of tailed off the last 30, 40 minutes. But so that was that was one losing trade, and the other was a 1 DTE, which I kind of hesitated on putting on anyway because of the overnight volatility, but I gave it a little bit of time, entered it smaller than normal, and didn't get stopped out on it. I ended up just closing it out before I got stopped because I wasn't seeing much premium decay. So those were my only two losing trades. Day trading was a winner, directional day trading. My British Iron Condors were winners. My Mahomes was a winner. My price action Iron Condors were winners, just picking spots to sell premium in pockets of consolidation. So that's been working well. And then had a couple other trades here I can't think of off the top of my head. But we opened up after the big gap down and we continued lower all the way down to the expected move. Then the news came out that the Mexico tariffs were paused for a month. Big gap, big shoot up. And then we just kind of consolidated, in a fairly tight range. If you could say from here, up to when we got to 6,000, then we dipped down to 59.80, so 20 points below and 20 points above. For the amount of premium that's in the options, that's a pretty fairly tight range. And so being able to sell premium in those, pockets was able to work pretty well. So that is the plan. I didn't do any discretionary reverse iron condors today. I just didn't see the need or the opportunity. And it looks like I ended up being right on the side of that. You got to be careful when volatility is pumped that it'll contract very quickly. So be careful with the reverse iron condors from that perspective. Oh, I forgot. On my calendars, I did get squeezed out of my 6.7, 5.7, and 4.7 for losses at the open. They hit their exit point, and so they closed near the open. But I came back, got a lot of it back with my 3.5, 3.6, 3.7, and then got in and out of a 1.3 today for profit. So got some of the calendar losses back. For tomorrow, okay, so there is a couple of earnings trades going on, one of which is PLTR announced after the bell, and then PayPal and Spotify before the bell. So those would be kind of the three that I would consider trading. I didn't do anything in PayPal or Spotify. If the price action sets up correctly, I may do a post-earning trade on one of those. But I did enter a trade on Palantir, and it is up big after the bell. PLTR, you can see after the bell, as soon as the bell rang and the data came out, it just continued to shoot up. About right here, about $94 a share was the expected move. You can see it closed at about 80, call it 84, 10.5 point expected move. So yeah, about 94-ish would be the upside expected move, and it's already at 102. I did an upside broken wing butterfly And so it's way up here. So I have no risk to the upside. And if it does come back, and remember, I've got all week. These options expire Friday. So if we do get a pullback into this tent, I've got a nice little profit area that we could profit from. If it keeps ripping up, I have no risk. It'll be a plus $60 trade. So I like taking these directional broken wing flies where you're essentially picking a direction. You're giving yourself no risk to one side, and you're just limiting your risk to whatever you want it to be on the other side with a big profit tent, and that's what we're doing here. So I will also look at a post-earnings trade here since we're gapping up above the expected move. Now, there's a lot of stuff going on, right, with tariffs and everything, so a lot could change between now and tomorrow morning, and the earnings announcements are really kind of second fiddle right now compared to the news that's coming out of the White House. So just stay on top of that. I use Financial Juice as the kind of immediate news source. We've also got a channel that's connected to Financial Juice in our Discord that you can see this exact feed from. And so that's kind of what I'm just looking for, and just keeping position size small, stay flexible. Again, don't get caught up in what used to work and just complaining that it's not working anymore. Adapt your trading. Take advantage of the volatility. Trading in volatility is or can be fun if you do it the correct way. So hope that helps. Look forward to some more action the rest of this week. Talk to you later.